Welcome back, everybody. Hope you managed to get some coffee and caffeination. So, guys, our next panel is one on how AML and KYC can potentially impact and hopefully positively benefit the whole area of AML and KYC. I personally have just come through a 5-month process in the Isle of Man for us to get approval for our crypto license for our ICO project. And certainly the amount of AML and KYC that was done manually on myself was incredible. Not just the usual bank account and personal details and passports, but also they wanted police records of every country I'd lived in over the last 20 years, which was nearly a dozen countries. So any way that could be automated and put on a blockchain and made much more secure and easy to permission access, I think would be of great benefit. So leading our panel for this session for the next 45 minutes or so, I'm going to introduce you to Sophie, who's one of the co-global heads of innovation at Linklaters, and also is an advisor to the Ethereum Foundation as well. So we've a panel, and I'll let Sophie introduce the panel. Thank you.
Great, thank you so much. Good afternoon, everyone. If I may just invite the panelists to take their seats, and I'll introduce them. And I must say, I'm very excited about this panel because we had a bit of a discussion yesterday, and I didn't realize that people could get so excited about KYC AML. So this is great. So immediately on my left is Anthony. He's a director of research at R3. And he's responsible for educating central banks on the benefits of blockchain for currency, especially the platform Corda. He has written a blog, which I have checked out, and I can confirm is quite easy to read and an enjoyable read, and also written a book on blockchain, which I haven't yet bought. And Vic is the COO of Asia Pacific for Global Transaction Banking at BAML. And he'd actually not given me his bio. I said, don't worry, Vic, because I've Googled you. And he was quite worried about that. But I've only shared the tamer parts of my Googling results. And Rasmi, finally, is a technology futurist with a background in product management and data analytics. And he's looking after the technology stack at OCBC Bank's FinTech and Innovation Group, the Open Vault, and he is also the holder of the coolest name card I have ever seen, so feel free to mob him after the panel. So starting off with an open question for each of you, do you see blockchain as helping streamline KYC and AML processes, and if so, how? Anthony, do you want to kick off?
Oh my God, you're looking at me. Okay, thank you very much. So I think we have to break down know your customer processes and anti-money laundering processes. So in the KYC or know your customer space, there's a number of things that need to happen. One is the collection of data from your potential customer, okay? And that's actually relatively straightforward for personal bank accounts. It's like 3 or 4 bits of paper. It gets a lot more complicated for entities, for corporates, especially for funds who are opening funds and special purpose vehicles, and the ownership structure of these can be quite complex, and you've got to do director lists and ultimate beneficial owners and all of these, and also different documents from different jurisdictions. So it can be, so even the collection of data is quite complex. Then the bank has to process it, they do the data entry, and then verify that data is real and not faked, right? They haven't been given fake data, the wrong name or missing out a director or something like that. And then finally, they have to make a risk-based decision whether they want to onboard this client or not. So there's a number of steps here. I think when people talk about blockchain for KYC, I think you have to be really specific on which particular part of the process that you're addressing, and it wouldn't solve everything. Blockchain can't really help a bank make a risk-based approach whether they want to bank a certain high-risk individual or not. So that's my, and of course, every single blockchain or every blockchain platform is different, and some radically different. For example, R3's Corda is pretty different compared to an Ethereum-based or a Fabric-based system. We don't broadcast all data to all parties, so when people say identity on blockchain, please don't put personally identifiable information on a blockchain and have that shared to 10,000 people around the world, because you're just going to fail on pretty much every piece of legislation. So we'll get more into that a bit later. But
we'll talk a bit more about the identity on blockchain. But I think, Anthony, a really important part that you just raised there is that when we talk about a blockchain solution, I think as we've seen across the last couple of days is that we need to be realistic in that blockchain is not going to solve all the world's problems, but it might solve some very currently tedious portions of problems, and to be really precise about what it is, what the problem we're trying to fix. Rasmi, what do you think?
So it boils down to the definition of KYC. So right, the way Anthony started, what KYC is. So know your customer or know your entity. It may be a corporate too. Both of them have very different route of how do you go step by step to identify a customer or entity. Now, when you resolute or arrive at the conclusion that this person or entity is noteworthy to give a loan or something, those each and every step differs from bank to bank.
I will pick up on this because there needs to be some standardization of that, right?
Yeah. So when we are talking about blockchain and KYC, there is the first step that starts with the verification of the person or entity is identity, which normally is, even now, even up to 200 years, is the same process. I don't think you can really innovate. Okay, biometrics and all that there, but we are not talking about putting all those information into blockchain. We are talking about reduction of paperwork.
We're talking about?
Reduction of paperwork. The amount of paper that is involved in identifying person, then stamping, and then some that. So that's the part of blockchain we are talking about in reference at this point.
Yeah, so really driving the efficiency piece of it.
Yes.
And Vic, from my Googling, I saw that you've been in the compliance space for 29 years. So do you think that with the blockchain, something's going to change fundamentally in this sector?
One of the things I realize is I never Google myself. So I'm actually now worried what's in the web about me. But just to give some
background. Just as well you didn't put it on the blockchain and put it on all the different distributed ledgers, because that would really be a disaster.
Just to give people a bit of background, the safer background, I have been in securities for 15 years. My last role in securities was the Chief Risk Officer for the Hong Kong Exchange. It's very unusual to be in this conference because when you say exchange, I came from a traditional stocks and derivatives exchange, right? Here we're talking about crypto exchanges. Then I lost too much hair, and I decided to move into banking, but it never grew back. And in banking, the whole thing has changed, right? The last few years, it just changed, and more KYC, AML is getting so difficult, challenging, expensive for banks, and you could see the headlines anyway, right? It's all that. The fines are in billions. They're not in millions even anymore. They are in billions, right? So that's how much focus now there is on KYC, AML. But having said that, I've not seen a bank, including mine, that is very good in this entire process, right?
Yeah.
KYC is a very, very big area. To me, it's about onboarding. It's also about refresh, and it's also about closures. So there's really three processes, right? It's not just KYC. I deal with this every day in three different aspects. Refreshers are most difficult in my mind because it's not just onboarding the client. It's about seeing the dynamic risk rating, this black box that turns around and says the risk level of this client, right? Depends on the type of industry the client is in. And that drives the type of documentation. Right?
Yeah,
the
so
high-risk
it's not
clients,
a static process.
That's right. The high-risk clients, you have to do this every year rather. In China, they do this every 6 months.
Yeah.
Just when you're about finished, the new cycle starts again.
Yeah.
Right?
So Vic, let me pick up on a point you talked about. No banks are particularly good at it right now. Anthony, maybe you can jump in there because R3 was working on a proof of concept for a blockchain KYC registry. Could you tell us a bit about that?
Okay, thank you. So where I think this gets quite interesting is where you have a data warehouse of identities. So in India, you have the Aadhaar system. In Singapore, you have MyInfo. And the way these work is you have essentially a database containing identity information, names, addresses, dates of birth, all the things you need to digitally replicate you as an individual. You hold these in a database. It's pretty efficient because you've got standardized data and you have APIs. So the way my info works is if I, as a person, I've put all my data in there. So if I go to some websites and I want to create an account, I can click on a button saying "suck it up" from my info. I'll get an alert saying, to my phone saying, do I let them take that data? I click yes, and then all the data is moved into them.
And where is that data set
so that's,
in my info?
I don't know exactly which data center, but it's just sat in a database,
data
controlled
centers,
my info. And it is efficient. However, when you do that, you create a honeypot for hackers. If someone can copy that data, they've got the data of every single individual. Aadhaar's pretty leaky. We've seen that in news reports over the past year or so. So you create a targeted place for hackers to hack, and the rewards are high for getting that information. So one of the experiments that we've been doing is to figure out how to get the benefits of data standardization and making it easy for entities to take pre-uploaded data from a place, but not have a centralized location for that data to be held. So an experiment which, lucky you, I don't think the press release is out yet, but I'm allowed to talk about this vaguely. We had over 35 participants in a global KYC project recently. It had banks, it had a corporate, and it had a central bank and maybe some regulators, you'll see. And the idea was that the corporate has all this corporate information about itself and uploaded it into a store. Now, the store doesn't have to be a central store. It could be, there could be multiple stores or even differently architected. You could even store your data in your own servers or on your own mobile phone. So instead of having a central repository, you still have standardized data with JPEGs and PDFs and photos of staff and whatever, but also with digital signatures of the attesters, which is quite important. And then that can be collected by any of the other parties on the network. So we had 35 or so banks. A bank would say, I want to get this data. The corporate would approve, and then the banks would get this data. Now, none of this is going on a blockchain. Okay, so we're not putting PII, personally identifiable information, on a blockchain. What's going over the blockchain is permission tokens. So some digital token that represents the permission, that I've given permission to this party to go and take my data. I can then revoke that permission, and also, when they hold that token, they get refreshes, to your point about refreshing the data. So if something changes, if one of my directors change, I update it once, and it pings out to any organization that has access to that on a push basis rather than a pull basis, and that's really important for the refreshing.
So in this context, the data is in a central place, is it?
Well, because we only had one corporate doing it,
Yeah.
It's in one place.
Yeah.
The idea is once you scale out, corporates will get a choice as to where they keep it. Do they want to keep it on premises? Do they want to keep that data on a cloud service? Pick any of them. Where do they want to hold that? Doesn't really matter. What matters is the stuff that's on the blockchain is the proof that there's been a request for data, that I've let them access that data, that they're still allowed to access that data, and then the closure when I terminate their access to that data. That's all stored on the blockchain, and that's fine. And Cord is a special blockchain because we don't broadcast all data to all people. So that means that if I allow Bank X to access my data, Bank Y can't see that I've allowed Bank X that data, because that's obviously leaking commercially sensitive information. So the way Corda works is much more appropriate for this particular use case than for, I don't know, some public crypto stuff.
Yeah, and Rasmi, you too worked on a POC, right? Could you share with us a bit of information about that?
Right, thank you. So for the POC that you are referring to, this was last year, and this is a public information. So it's a national utility project on eKYC, or putting KYC on blockchain, and OCBC along with MUFG and SSBC, 3 partners led by IMDA on the MyInfo. So this is how the KYC panel was set up. So the whole idea is to leverage upon and add value addition to MyInfo. So For those who don't know what is MyInfo is, it's basically a central repository owned by a government entity, which is IMDA, which is the Media Development Authority of Singapore, taking all your personal data. So when I say personal data, it means name, it means your date of birth, it means your NRIC, your PIN number, etc. Few of these things will be put into blockchain. So when we say blockchain, coming back to Anthony's point, the data actually is not sitting on blockchain. That will be disastrous. You put a hash of the data, and it's a pointer location that you point to, right? Now, the very sensitive topic is it truly distributed? Because though we are sharing, the whole purpose, the whole point over here is sharing of information. This is not about who owns the data, because if you go into that, then the whole legal framework kicks in. Because if something happens, who will you ask? Who will be responsible for that part, right? So hence, I would say it's not truly distributed, because we do have IMDA controlling the base inline information.
Yeah.
We leave it up to there. Then the 3 banks, each of them, the POC's range was within retail. That means a walk-in customer, right? So this customer, let's say HSBC, they have 200 data points when they do KYC. Now OCBC, I don't know, but let's make a number 150 data points. Now OCBC disperses a loan to this customer. We take this decision on 150 data points, which HSBC will not agree to. So how do we conflict manage that? So all we are trying to say over here is we have a baseline that is coming from IMDA. Customer gives the consent, as like R3 did with the 35 partners. Once the customer gives consent, the basic of those, let's say 30 attributes, that will be shared through blockchain to the other 2 parties.
Yeah.
What do you mean through blockchain?
So when I say through blockchain, it's the engine or the middleman who is facilitating the trail that where this data was originated. Why I mean to say that? Because the whole problem is sharing of information, right? So let's say the first customer, now a British guy wants to open an account in Singapore. He walks into OCBC, the very first bank he goes to. He says, okay, these are my information. This is what is available in my info. I give you consent, upload. The next time you want to go to HSBC, and he says that, dude, I have already uploaded my data in IMDA. I gave consent to OCBC. I do not want to fill all these things again. So that's why government wants to simplify the process, simplify the paperwork. I do not want to fill 200 points for you, but if I agree, and as it is my data, I gave it to OCBC, I gave it to IMDA, you, with my consent, can collect this information.
Yeah,
the additional ones.
let me stop you there, Rasmi, to ask a question to bring back to the point we're talking about standardizing processes.
Yeah.
Because even in your example, we're talking about Bank A wants 120, Bank B wants 150. If what we're saying is MyInfo has a base of 30, at least it sort of gets you, reduces some of the...
It gives you a kickstart.
Reduces some of the pain there. But how, Vic, do you think it's even achievable to think about banks agreeing on what the standardized KYC would be? Because it sounds like that would be a key part of kind of really helping reduce some of the pain here.
Yeah.
I like to think so, but banks don't trust each other, right, today, right? We don't trust each other. People don't trust banks. We don't trust people, you know. It just goes around. Here we are talking about blockchain on trust. But it's really, you see, it all comes back to what Anthony talked about earlier, was KYC is about jurisdiction. I mean, you go back to the basics first, right? When do you need KYC? You need KYC for a bank is if you are defined to have banking activities with a client. That's the most basic principle. Then you build on top of it on what type of documentation, which are AML related to onboard and to refresh, right? And that's different. Onboarding, we have a lot of documents. Refresh, probably less, right? Because you have other terms and condition type of documents which probably don't need to be refreshed, right? So you have to look at that. And then from the perspective of blockchain, you got to see the type of data that's required. Meaning there are some data, I mean, to Rashmi's point as well, some data which by jurisdiction, you all need that, right? And I think that's where blockchain can help, because you put it there, you permission it to certain banks to allow to take them.
Yeah.
Our banks, we bank with corporates
But Vic,
as
sorry,
well.
I'm just going to jump in there about this. When you say put it there, put it like
On the
Anthony,
chain.
Anthony asked me, do you have a perspective on that? Just putting the data on the chain, because I think.
Yeah, I think we both covered the
Yeah.
fact that PII is not going to go on the chain.
Yeah, so-
In fact, if you put personally identifiable information on Fabric, Ethereum, any of the Ethereum, Quorum, any of those clones, you will fail all the rules. They are not compatible with GDPR. Corda is the only blockchain that's compatible with GDPR because it doesn't broadcast the data to everyone. Right? So all the others fail GDPR at the moment. I'm sure they'll add layers of complexity to maybe do something with the data. I don't know how it'll work, but you don't want to share all this data with everyone. You don't even want to encrypt it and then send it to someone and not give them the key so that they can't decrypt it. That's just ludicrous.
Because I think that this is worth dwelling on, because this is what we were discussing also yesterday, right? Because when we talk about blockchain as a solution, as a layperson, because I don't pretend to be a technologist, the immediate kind of assumption is that the data is going onto the chain, right? And then that's copied across the different distributed ledgers. But that's actually not what's happening for a few reasons, one of which is there are concerns around personal privacy on that. And secondly, it's hacker's paradise.
And accountability.
And accountability. You had a more colorful way of saying it yesterday, but we'll stick with accountability. Yes.
And so the hacker's paradise. If you want to minimize the number of locations, the PII, I'll say PII now, personally identifiable information. You want to minimize the number of locations they're held in because it's toxic data. It's data that's useful to you. You need to know it as a bank because the regulators will wrap your knuckles if you don't have it. But it's
that,
really
right?
Absolutely. But it's toxic because if it leaks, if it gets leaked, then you have to pay more fines.
Yeah.
Right. So you don't want to stick it somewhere and then generally broadcast it. The perimeter of the attack surface area gets much bigger.
Yeah.
Going back to your point about who's accountable for this data.
So where's the blockchainy bit of this? Maybe we can go through that a little bit. So we've established that the data is not set on the blockchain. So where's the blockchainy bit? In the pointer or?
So let's go back. I mean, everybody in the room knows that blockchain, we are talking about immutability aspects of it, right? Mm-hmm. So in my example, when these three banks are transacting, the source is IMDA. Now from IMDA, the data went to OCBC, then go to Bank B, then I went to Bank C. So at one point of time, let's say you trusted the name is XYZ, and it originated, let's say, IMDA. Now, OCBC verified, yes, the name is XYZ too, but the person changed his name from XYZ to ABC. People do that. People do change their name. Now, the refresh part comes into picture. How do you make sure that XYZ is still ABC, the same person? You will meta-refer, sorry for being too technical, and you will meta-refer other information. Is the date of birth same? Is the gender same? Is the age same? All this, and the address is same. If it is same, then it's the same person. So what it is telling is it's leaving a trail. Who identified this person first? Who is the second validator? And if both of this information are correct and the customer immediately walks to Bank B or C, I can now refresh the data from ABC to XYZ. That's the maintenance part, right?
But you talked about immutability. Can we jump there for a second? Because I'm not super convinced by this immutability point because, it's not immune from hacking, safe. So why do people talk about the immutability?
So the point being, when you are getting stored anything, that's what the blockchain concept is by its definition. When you are creating certain information and people have already validated it is true, and it is being shared more and more exponentially. Of course, there is a meta number, which is the so-called 50%, then people can break it. So more and more people are adopting it. That means if you take a vote, okay, let me make it simple. Let me walk on the street and somebody here tries to rob me or hit me, right? And more than 90% of the people here know me, who am I? I am Rasmi. And few of them are my friends, and the person who attacked me is your friend, okay? So you will say that my friend didn't attack me, but my friends will say that, yeah, that guy attacked me. So in this case, we do need, and everybody now, police scams, we put a lie detector, and more than 50% people say that, yeah, this guy attacked, trust me, right? So here, it's a very truth and legally binding that more than 50% of people are saying that this person attacked, trust me. So this is what happens on the blockchain too.
Yeah, but that doesn't fill me the
I'll-
whole
I'll-
amount of
I'll-
comfort.
I'll try.
right?
Let me
Yeah.
let me have a go. Yeah, thank you. So what's the business problem we're trying to solve? We're trying to standardize data. Okay, so we're trying to get data into machine-readable fields so that banks can suck it in. It can go straight into the system, and someone doesn't have to type it in. And then people can do their checks. So standardized data, tick, doesn't need a blockchain. That's great. Then we've got the problem of the honeypots, the data repository where if a hacker gets it, it's pretty devastating. And so anyone running a KYC utility full of centralized data, I'm looking at you and some others, are nervous that they get hacked every day, right? So you put a lot of cybersecurity around it, and that's good. So, but is there a way of removing that kind of central place which contains everyone's details? Yes, you can then distribute the data, not on blockchains. You distribute the data into various things. So I could upload my personal data to my own Dropbox. I could upload it to my iCloud. I could store it on the hard drive of my phone. Sure, it's my data, it's under my control, but the point is it's not sitting in a data warehouse somewhere. What goes on chain is the tracking. It's have I given it's the request for permission, consent to permission. It's the yes, I'm fetching the data, and then I've stopped giving permission. Now all of that needs an audit trail. But who the hell is going to, if we're trying to decentralize things, who the hell is going to give that audit trail? Well, wouldn't it be nice if you could somehow, with the mathematics of cryptography, create an audit trail that is guaranteed that you can run an algorithm over it, and your computer will say, yes, this has actually been signed by those parties, and the data hasn't been changed.
Yeah.
Right? Then you can say that is a true audit trail because no one's been able to change it, and that's wonderful. And I think when people talk about immutability, it's actually immutability is not the right word to use. Because any data can be tampered. It's more tamper evident. It's about tamper evidence. It's about being able to say for sure that this data hasn't been tampered. It's not about the fact that you can't tamper with the data because that's nonsense. So I can by myself, without checking with anyone else in the world, I can run an algorithm over some data, and the computer will say, yes, this is valid. All of these signatures are valid. Or no, something's funny with the data, in which case that's not.
So the real benefit is the audit trail.
That's one of the. So one of the
Yeah.
benefits is the audit trail. The other one is data standardization and the ease that data can be passed around. Remember,
Yeah.
it takes up
Yeah.
to 6 months to open an account for some corporate.
Yeah,
For some
but the
corporate.
data standardization is not a blockchain point. It is,
Okay.
right? Everyone could agree, if the banks would trust each other for a minute, they could agree that this is what we do to standardize the data.
Well, going back to that, it's not
Yeah.
about banks trusting each other at all. It's not banks passing information between each other from one bank to another bank. There's none of that in
I think
this
trust we're
architecture.
talking about in the context of collaboration, right?
I think if I can add to that, I
Yeah.
mean, I'm a fan of blockchain, right? But to me, let's distinguish private chain with the public chain. So in my mind, more like a private chain works. Private chain between banks and corporates. Again, our clients are corporates and FIs. We don't bank retail, right? So to a corporate, if you put one certain type of data, you don't put all the data, you put certain type, or at least have a pointer to where the data is, then they only update once. A corporate today banks with several banks. They don't do one bank. So imagine them doing KYC for each time the bank has a cycle on them to get refresh, right? So they should just put the data there, or at least have a pointer with permissioning that the bank can go get that data themselves. So it's within this private chain among the banks that they permission and allow that data. That's the first level. The second level is what you talked about earlier, Sophie, which is standardization. What type of data do you need to put up there that is standard, fits the jurisdiction, fit for purpose? There is always that program within banks that have different type of data, but the basics are always still there, right?
Yeah.
Your board resolution and your registration,
So
all those are
the
still
private
there.
chain, that's very interesting, Vic. So Rasmi, in the POC that you're working on, was it conceived as something that would be a private chain for a small group
It
of
is private.
banks or public?
It is private. I mean, you have to be private, of
Yeah.
course. Because it may evolve into semi-private in future. What I mean by semi-private in the sense is architecting it in such a way that the person can distribute his identity from any device. The customer is at the end goal,
This is what,
right?
Anthony, you were talking
Yeah.
about, right? It's sitting on my data, sitting on my phone, but I give permission and it can
Yeah.
pick it up.
Yeah, but for now, when we are experimenting with all these use cases, it has to be private because we do not know how it will span out in future.
Yeah, and what's really interesting is the industry is starting to see this. So earlier on, the banks were exploring Bitcoin, and then Ethereum came along, and they got really excited about Ethereum. And you can see this in the history of banks exploring blockchains, and even central banks, which is the area where I work. They start off on Ethereum, realize it's not suitable for that purpose, and then they move on to Corda and some others. A couple of days ago, the B3I insurance industry, so be it blockchain for insurance industry initiative or something like that, which was founded by 12 or 15 of the world's largest insurers, Allianz and the rest. They have been exploring blockchains for over a year. I'm sure they looked at some public chains. They then looked at IBM's Fabric, and then a couple of days ago they decided to move to Corda because that was more suitable for their business use case because of the point-to-point privacy. So it's not just public versus private, it's public then private. And then within the private blockchains, what's more suitable? Sure, if you want to do mangoes, go and talk to IBM. But if we're talking about KYC, actual finance, equities, currencies, bonds, financial instruments, then people are moving towards Corda.
Right. And if I go back to this concept of the semi-private chain, where there's a pointer points to your personal drive and so on, and it's picking up from there, do you think, Vic, that a bank, generically, would be comfortable with that to pick up data from that individual in a way, or would there be a desire for a centrally managed database that's kind of signed off by a government or IMDA or the like?
Well, I can't speak for the bank, but in my
so
mind,
a bank.
in my mind, it's easier to go to the chain and find the location where the client gave you permission to pick up. You have to compare that to what we do today. That's how bad it is today. Today, you're getting data by pieces of paper, by faxes, by email, scans, and then it gets forwarded left and right in different departments of the bank. That's reality today, right? So compared to what it is today, anything that is centrally picked up or on a chain, I think could improve things a lot, right? So I'm not saying that's your, Shangri-La, if you will, your ultimate goal, but it has to be better than what it is today, because today is just pieces of paper floating around on email. That's what you're getting today.
Yeah, so there sounds like there's a piece around the digitization of the data, and that alone would actually move the needle quite significantly. So there are some quick wins from, even before you get to the sexy blockchain stuff, there are some quick wins.
Very sexy.
Very sexy, absolutely. Before we get, I'll just say that again, before we get to the sexy blockchain stuff, there are some quick wins that you can get from digitization and perhaps some more basic technology. But getting back on the blockchain aspects, Rashmi, do you think, what are the technical limitations? If you're looking at a potential KYC solution, and we've already discussed that solution from the blockchain aspect may not be the end-to-end, but it is part of, it might solve particular problems. What are the limitations in blockchain technology that you see that would prevent it from contributing to such a solution?
So I can only speak for what is happening now, because the world of blockchain in terms of its protocol is so rapidly changing, I cannot say what's going to be, and who is the clear winner in terms of protocol itself. So currently, the private blockchains that we have, be it Ethereum, Hyperledger, or Corda, the problem is how private you really see them. Because how private you really see them. Because all these protocols, right, the evaluation point of view, though they say that it's permissioned and private, the degree of that private is left to the decision makers or the implementation grade, right? So we do not have that baseline yet. And who will be setting that baseline? I don't think it will be a technology problem. It's by design. When you design something, you make it flexible. That's how technology is. But we are in a regulated industry. Things are slightly rigid here. I would say more rigid here. So if you want to put that technology into a rigid environment, now we need a standard. Without that, there will not be any progress.
And where will the standard come from?
Exactly, and this comes back to I guess the banks trusting each other.
Yeah, it's about, at the end of the day, it's still about banks trusting each other or not. And then you run into politics and you run into governments, all that comes in play. I don't think it's the blockchain, right?
Yeah.
We haven't figured out which blockchain yet. There's no standard industry blockchain for KYC, but it's really down to the basics first of governments trusting each other, banks trusting each other, then only talk about the technology, and then only talk about data and which blockchain.
So banks can actually work together. So SWIFT is a great example of kind of the standards body that banks realize that if they conform to the standards, then life will be easier for everyone, and easier means cheaper, etc. So I think they can do that. R3's consortium, we have over 200 partners in our ecosystem. So that's over 100 banks and over just over 100 what we call partners. So partners build apps, banks consume apps. So we've got builders and consumers of technology. They're all doing it on Corda. So we can do that. It's been a bit of a struggle over the past 2 years, but we're getting there. And you'll see in the next few days when we release this thing about the 30-odd banks from different countries, with some potentially some regulators in there as well, with the corporate, that they can actually achieve that. It is tough to pull it together. But there are initiatives. B3I, the insurance consortium, that is a bunch of fierce competitors. The insurance companies compete against each other, but they come together to form the consortium to make good decisions about the technology they want to use for blockchain platforms in the insurance industry.
And I wonder whether then somewhere like Singapore might have a bit of a competitive advantage if we do have, the MAS who is willing to take a constructive and engaged approach and who are willing to persuade banks that it might be helpful to collaborate with each other. And then we have MyInfo. Do you think, would you agree with that? Rasmi, you have some, without any specifics, of course, but generally?
Singapore, being Singapore, of course, will be a little bit advantageous for others. The way MAs or the government bodies are structured over here, we can do it much better way than others. And this country has a track record of producing standardizations for adopting in the region, right? So I'm positive about that. The timelines is a bit interesting because when you are talking about standardization, we don't create it for the sake of fun, right? You have to have that adoption or critical mass, and then you see, okay, now this standardization needs to talk to others. So that will be interesting point of view, and I think government, MAS, both of them are collaborating with other players across. R3 is involved in that too.
Project Ubin, project driven by the Monetary Authority of Singapore, initially with R3 to help to pull the project together. The three of us, our organizations that we represent, but do not speak on behalf of, work together on Project Ubin Phase 1, Project Ubin Phase 2, and I hope Phase 3.
Yeah, and I think that, Vic, totally take your point that it might be hard for competitors to work together, completely understood. But in an industry that is facing potentially a lot of disruption, I would have thought the incumbents would want to adopt the technology to really get ahead of the curve, and you have the benefit of, pulling together to do that.
Absolutely, and this is why I'm sitting here, right?
Yeah.
Don't forget, I'm from a traditional exchange, Hong Kong Stock Exchange, right? And I'm also in the traditional banking industry today. Somebody asked me what is transaction banking. I'm the COO for transaction banking in Asia Pacific, right? And that was you, one of them. And transaction banking is your basic butter, bread and butter of the bank. Anything that touches checks, cash, bank accounts, transfers, money transfer, that's basic banking. That's what we do. So yes, it's being disrupted. I'm particularly myself very interested in this area, fintech and blockchain, because I see this change coming, and we want to be part of it. And not everything fits blockchain, right? But a lot does. I mean, we talked about this 2 days. Definitely for KYC, I think pieces of data is definitely relevant. But the key word I get from these 2 days is collaboration. I think that's the major word that I've taken out here, that, you know, if people want to collaborate, that's the way to go. I think that's why you see banks included participating in this blockchain type or fintech type initiatives.
He's done my sales pitch for me. This is why R3 is born. We're born to get banks, fierce competitors, to collaborate together. I wish you would join us. I wish you would join us.
You can do your recruitment after the panel, Anthony, after. I want to leave a little bit of time for questions. So the final question for the panel is this. To sum up, I'm going to ask each of you, do you think, Rasmi, that blockchain is the right technology to look at as the basis of some solutions in KYC, or are we barking up the wrong tree or chain?
No, I think we are on the right track, and I will be putting that very specific, right? When we are talking about data sharing, it is there. And comparatively, I think if there are any cryptologists in this room, there is a new technology called homomorphic encryption, which is coming out in a big way for data sharing and all. But having said that, blockchain, the adoption is so high, and the standardization part, if we crack that up, if MAS, government, and the industry bodies combinedly sit together and say that, okay, this is the base, I think it will be there.
Yeah, so short answer, yes, as long as we get the collaboration piece right. Vic?
Yes, very obvious. I will also add that last year when I looked into this KYC for blockchain, I found at least 3 groups of people just in Singapore. One of them is this guy, but there's 2 more, right? And where it didn't work for me is all these NDAs and all these things that people have to sign just to participate. And this comes back to the point, we don't trust each other, so we have to sign NDAs, and you have to get lawyers involved just
Nothing
to
wrong
start.
with that. Good to have lawyers involved generally in life.
Yeah, Linklaters is a great law firm.
So I've heard. So without saying the words R3, Anthony, what's your response?
Okay, so should blockchains be used for KYC?
Good point.
Yes, absolutely. Please don't put information on things that are going to be shared to lots of people. To the comment earlier about SWIFT, so the Director of Research and Development for SWIFT a couple of weeks ago said in the Financial Times newspaper that they tried blockchain technology for SWIFT and it didn't work because they'd have to create 100,000 channels in order to manage these blockchains, and that was just a headache. They picked the wrong blockchain. I mean, there's only one that does channels, so you can probably guess what they picked. But yeah, pick the right blockchain.
Great. I want to open up to the floor for any questions.
Hi. First of all, thank you very much. I think this is a very, very interesting talk. I mean, I work in a bank, an international bank, and I work in the corporate coverage function. So I see the pain, the day-to-day pain we have in onboarding clients. So just 2 quick side comments. I don't see this point about banks not trusting each other. I really don't know what the issue is. I think that's a red herring. I think standardizing information is also a bit of a red herring, at least in the corporate coverage function, because a lot of the documents that we require from clients, from corporates, that are certified true copies are the same as what many other banks would require. So I think the key to making this work is giving comfort to the clients, to the corporates, that they can have their information stored securely, safely, and they have comfort in knowing that only the right people have permission to. So, Anthony, the model that you described sounds very, very interesting. It sounds like a very workable solution from my perspective. The only thing I would like to ask is how scalable is that across jurisdictions? Because for us, the biggest challenge is when you have a corporate like, say, Siemens or Robert Bosch or Apple or whoever, these guys, we deal with these clients from headquarters all the way down to subsidiaries across all these different locations. Some of them have a model where they keep their information centrally. Other people have a model where they keep their information in different regions or in countries, branches. So how could your model satisfy these different requirements and needs of corporates? Because if we get that right, I think you have hit the Shangri-La.
Thank you. Yeah, and thank you very much. And that is one of the another of the challenges of centralized data stores. Which country do you put it in? Right, with data sovereignty becoming important, where physically which service does the data do the data reside? So with one of the architectures that I described earlier, you can have data sitting where you need it to be sat. In whichever country you need it to be sat. And remember, it's just the permission tokens and the revocations and things that travel across the blockchain. There's no GDPR on that. That's just permissions. So keep your data at home, keep it on your phone, keep it in the data in the warehouse in your country, in your geographical jurisdiction, and then when that data is called for, and then you grant that permission, then the data will fly over the border. From point to point, and a quarter thing, from point to point. And that doesn't even go on blockchain, that just goes straight. And that data has to travel across the border anyway, otherwise, else how are they going to get that data? So there's no additional complications there. But yeah, the concept of being able to hold data, we call it at the edges of the network, if that kind of makes sense, rather than in the center of the network, so in various different points. And some people are comfortable with clouds, and they'll use a cloud, and then they'll pick the right data center. Some prefer to keep it on premises. That's all fine. That can all work in this kind of model. Thank you.
There's a question over there.
And maybe just to share a testimonial on our experience with KYC. So we have a KYC registry for banks, so it does not include corporates. It's for banks to do, FI to do a KYC on other FIs when they use them. So I would say that the challenge is not really the technology that you use, whether it's centralized or decentralized. It doesn't matter too much. That's probably 20% of the problem. The 80% of the problem remains changing attitudes and habits. Standardization is clearly one of the challenge. It took probably a year to agree with a set of banks what should be in the KYC registry in terms of data points, what document needs to be uploaded. That's manageable. It's a lot of work, a lot of consensus work, but that's, as you mentioned, we used to doing that at Swift, and we managed to do that. But then the next part was to change the habits of the compliance officers. Instead of sending a fax, load that information, even if it was only once on the KYC registry. Before, it took probably years to persuade people having registered to the KYC to use the KYC and upload the data on the KYC for usage. So I guess changing mindset is a big challenge that is sometimes overseen by any solution technology providers. We managed to do that now. It's 4,500 banks on this KYC, working fine, but it's a lot of efforts.
Thank you so much. I think that's 45 minutes on the nose, Dean. So please join me in thanking our panelists this afternoon.